Click the bell icon to get latest videos from Ekeeda.
Hello friends, today we'll do one question of profit reconciliation statement based on some typical items. Let us read the question. The net profit of Dhruv Limited shown by cost account for the year ended 31st March 2015 was rupees 10,35,000 and by financial accounts for the same period was rupees 5,200,000. So we have profit as per cost book as well as of financial book. A scrutiny of the figures of financial accounts and cost account revealed the following facts. Administrative overheads under recovered in cost account 14,800. Under recovered means taken less. Actual administration overheads are not given, but it is suggested that they are taken less in cost book. That means they are taken more in financial book. Factory overheads over recovered. Over recovered means it is taken more in cost book. Actual amount is not given, but what the amount is recorded in financial book, the cost book figure is more by amount rupees 20,000. Depreciation overcharged in financial accounts 40,000. Overcharge means again taken more. Depreciation is charged in cost book and in financial book the depreciation is charged rupees 40,000 more than what the figure is there in cost book. Interest on investment. This item is an income. This income is recorded only in financial book. In cost book we don't record interest on investment. Loss due to obsolescence charged in financial account. There may be possibility of some outdated stocks material due to which we have suffered a loss, which is charged to this account obsolescence charge in financial account 24,000. Now this is clearly given that it is charged in financial account. That means it is not charged in cost book. Abnormal labor wastage charge in financial account. This is recorded only in financial book. That means it is not recorded in cost book. Income tax provided in financial account. Now income tax provision is recorded only in financial book. It is not recorded in cost book. Bank interest credited in financial account. This is an income which is recorded only in financial book. In cost book this income is not recorded. Stock adjustment credited in financial account. Credited means stock adjustment resulting into income. This is particularly in financial account. It is not recorded in cost book. Loss due to depreciation in stock value charged in financial account. This is again peculiar to stock which is charged only in financial account. That means it is not recorded in cost book. So we have gone through all the items which are responsible for disagreement of profit as per cost book and financial book. Let us do working note. We have both the profits here, profit as per financial book as well as profit as per cost book. We'll start with profit as per financial book. Accordingly, working note has to be prepared. In first column here we will be recording all the items which are responsible for difference in profit. First column amount financial book, second column cost book. Our profit reconciliation statement will be starting with profit as per financial book. Therefore we have kept first column as financial book and second column is cost book. They also given us profit as per cost book. If we start our profit reconciliation statement as per profit as per cost book, then our first column will be cost book and second column will be financial book. Last column will decide the amount of difference. It will also give us sign plus and minus which we are required to use for preparation of profit reconciliation statement. Admin overheads under recovered in cost account 14,800. They are under recovered in cost book 14,800. That means they are charged more in financial book by amount 14,800. We don't have actual figure of administration overheads. So whatever is the amount in financial book, it is more by 14,800 than that of cost book. So if cost book we have nothing, in financial book we can have 14,800. Factory overheads over recovered in cost account 20,000. Now factory overheads are taken more in cost book. What we have actually paid and recorded in financial book, compared to that 20,000 more is taken in cost book. So we'll put 20,000 in cost book column, indicating that whatever amount is actually paid as per financial book, cost book is 20,000 more by that amount. Depreciation overcharge in financial account 40,000. Now depreciation is taken more in financial book in relation to cost book. So we'll put that 40,000 here. We don't have actual amount of depreciation, but whatever amount charged in cost book, financial book amount is more by 40,000. Interest on investment, this is income, rupees 20,000. This income is recorded only in financial book. Loss due to obsolescence charged in financial account 24,000. It is recorded only in financial account 24,000. Abnormal labor wastage charge in financial account 2 lakhs. It is recorded only in financial book. Income tax provided in financial account 2,80,000. Bank interest credited in financial account 4,000. This is recorded only in financial book. Stock adjustment credited in financial account 28,000. This is recorded only in financial book. Loss due to depreciation in stock values charged in financial account rupees 48,000. So in working note we have considered all the items which are responsible for disagreement of profit as per financial book and cost book. Now from the figures of first column we'll deduct figures of second column so that we can arrive at answer plus or minus. 14,800 minus 0 over here, so it will be plus 14,800. This plus means in profit reconciliation statement we are required to add this figure. Factory overhead 0 minus 20,000 minus 20,000. It means in profit reconciliation statement we are required to deduct 20,000. Depreciation overcharged plus 40,000. Loss due to obsolete charges in financial book 24,000 minus 0 plus 24,000. Abnormal labor charge wastage in financial book 2 lakhs plus 2 lakhs. Income tax provision 2,80,000 minus 0 Depreciation in stock 48,000 minus 0. This is how we have determined treatment of expenses. In case of income, same procedure has to be followed, with difference that we have to take opposite signs. That means in last column, if we get plus, we have to take minus. If you get minus, we have to take plus. For example, 20,000 minus 0. Here we are required to write plus 20,000. But you will take opposite sign, it will be minus. Bank interest in financial book 4,000 minus 0, it should be plus 4,000, but we will take opposite sign, minus. Stock adjustment credit 28,000, it should be plus 28,000, we will take minus. So we have fixed signs plus or minus. Now we can complete profit reconciliation statement. We have to start with profit as per financial book. Financial accounts, profit is 5,200,000. We have to add those items as per working note. Administration overheads 14,800. Depreciation overcharge in financial accounts 40,000. Rupees 40,000. Loss due to obsolescence charge in financial account 24,000. Abnormal labor wastage in financial book 2 lakhs. Income tax provision 2,80,000. Depreciation in stock 48,000. We have added all items where we have plus. Now we'll subtract the items. Factory overheads over recovered in cost account 20,000. Interest on investment 20,000. Bank interest in financial book 4,000. Stock adjustment credit in financial book 28,000. We have to add all these figures which are positive. It comes to 6,06,800. This will be added to this figure. It is 11,07,000. We'll add these figures which are negative. Total is 72,000. This will be deducted from 11,07,000. We got 10,35,000. That is that is profit as per cost book 10,35,000. We can verify this. Here second line of the question says profit as per cost book 10,35,000. Here we have 10,35,000. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.